Hello everyone, welcome to today's video and this is your friend Bharat Shankar. The US has officially entered a technical recession because their GDP fell by 1.6% in the first quarter and 0.6% in the second quarter. And China is also going through an economic slowdown because of their zero COVID policy and the real estate crisis. Russia and Ukraine are fighting each other in a war which has disrupted the global trade cycle and currencies across the world are depreciating, including the Indian rupee. So all these events together seem to set a perfect stage for the global economy to go into a recession. And this recession is believed to be led by the US economy. So in today's video, we'll try to understand what is happening with the US economy and the global economy and also how this recession can impact the Indian economy. And most importantly, believe me or not, there is a way to benefit even from the recession. And how we can benefit from the recession, we'll also talk about that. But before we go forward, if you want to appreciate me and my team for all the efforts we put in making such informative videos, then you can press this like button and like the video. And you can also press this red button and subscribe to the channel. So now let's continue, and first of all, let's try to understand what is a recession in very simple words. A recession happens when a country's economic activities start to decline and there is a rise in unemployment rate. And technically, a recession is declared when a country's GDP decline for 2 consecutive quarters. And presently, if you see, US is the perfect example for a technical recession, where US GDP has reduced for 2 consecutive quarters by 1.6% and 0.6%. So now many of you might think that there's a technical recession in USA, there'll be a catastrophe, that, this and all. Then let me tell you, recession is not something new to US economy, because USA has experienced more than 30 recessions throughout history, dating back as early as 1857. So to clarify, recession is not a new monster, and history teaches us that recession is an inevitable part of the economic cycle. So now let's try to understand what is happening in the global economy, or specifically US economy, because of which a superpower country like USA is going to face a recession. So there are two main reasons for this. Reason number one, overheated economy. And when do we call an economy overheated? When the economy reaches the limits to meet the demands. And now some of you might find it hard to understand this statement. So let me simplify it with a simple example. Let's assume that there is a bakery which can manufacture 1000 packets of bread per day. But now what happens if the demand for bread packets exceeds 1000 packets in a day? And some of you might say that it's very simple. You hire more people and you increase the salary of existing workers so that they don't leave the company, manufacture more breads to meet the demand. Very simple, right? But imagine this happening in every sector and industry in the economy, which means people are earning a lot of money, industries are earning a lot of profits, and when people have more money, then what they will do? They will again go out and buy goods and services. They will buy new shoes, they'll buy new clothes, they'll buy a new television, they'll buy a new car, they'll buy a new house, which means again the demand of goods and services in that economy is increasing. And now what do you think happens if the demand for a particular product or service increases but the supply is limited? What will happen? Automatically the price will increase, which will finally result into high inflation. And this is how a simple economy becomes an overheated economy. But the present high inflation situation is not only because of the overheated economy, but there is another important reason which is massively fueling the US inflation. And that reason is popularly referred as the Black Swan event. So in economic terms, a rare and unpredictable event is called as a Black Swan event. And the last Black Swan event was recorded in 2008, which was the housing market crisis. But then comes coronavirus, which was actually not a Black Swan event according to the person who termed the coin Black Swan, who is Nicholas Taleb. But still, the COVID-19 pandemic did something which nobody has ever imagined in their wildest dreams. And there is no need to explain what COVID did to the world because we all know it and have gone through it. But the problem here is not the COVID-19 pandemic, but the problem lies in how the US government tackled the COVID-19 situation. So during the COVID pandemic, economies all over the world witnessed a slowdown, but the US government decided to print a lot of money to recover from this economic slowdown. And the US government ends up printing around $13 trillion. And in order to understand it much better, if I tell you, the world's biggest war, the World War II, costed the world around $5.2 trillion. And this seems nothing in front of the $13 trillion which the US government printed just like that to come out of an economic slowdown. So this $13 trillion which was instantly pushed into the economy certainly revived the economic growth and also the stock market, which means right now there was excess amount of money money in the economy, which was reviving the economic growth and also the stock markets. But this act has consequences. And this is not rocket science. Even a guy with common sense can tell you what happens when there is excess amount of money in the economy. Exactly, it will lead to high inflation. Because if there is excess amount of money in the economy, then this excess amount will be spent again on the goods and services, which will in turn increase the demand. And as the demand goes on increasing, the price also goes on increasing, which will end up in a situation where we have to face high inflation. And this is the graph of US inflation, which is at its highest in the last 40 years. So now some of you might have this question or confusion that Bharat, are we here to discuss inflation or recession? And the answer is both, because inflation and recession are closely linked together. So now you might ask a question, how inflation is triggering a recession? So if you see, any country facing high inflation can't survive this inflation for long. So they have to figure out a way to control this high inflation. And that's where the central bank of that particular country comes into picture. And the central bank of that country is responsible for controlling inflation. For example, the central bank of USA is the Fed and the central bank of India is the RBI or the Reserve Bank of India. And this way every country have their own central bank. So now the question comes, how central bank control the inflation? So they control it by increasing the interest rate. So what happens when they increase the interest rate? It will reduce the liquidity or the flow of money in the economy, which means basically it will reduce the excess amount of money in the economy. So the logic here is pretty straightforward. If printing of more money in the economy leads to inflation, then reducing that money in the economy should lead to deflation. And in order to reduce the liquidity or remove the excess money out of the economy, the central bank will increase the interest rates. So what happens when they increase the interest rates? So let's say you wanted to start your own business, and for that you wanted to take a loan from the bank, and bank was ready to give you loan at a 10% interest rate. But now the central bank suddenly decides to increase the interest rate to control inflation, because of which the bank interest rate will also go up from 10% to 15%. And now the question is, will you take that loan? Maybe the answer might be no, which means you will not start a business, you will not hire people, you will not pay salaries, and you will not sell any goods and services in the economy. And you might also not take a loan to buy a house or a car or make any spending on personal loan, because the increased interest rate will make the loan EMI more expensive. And now guess what happens when the consumption and the production of goods and services go down? Exactly right, the GDP will decline. And when the GDP will decline for 2 consecutive quarters, then that particular economy officially enters a technical recession. And this is how the central bank's attempt to control inflation can trigger a recession. And now if you see, the central banks across the globe, including the Fed, the RBI, and many other, have started increasing the interest rate massively in order to control inflation. And if you look at this graph, you can see a sudden spike in the interest rate in the year 2022, which is almost breaking the 10-year highs. So these are the reasons because of which the global economy is expected to go into a recession, and this recession can be led by the US economy. So now comes the real question. If there is a recession in the US, then let it be. But I am particularly interested in knowing what will be the impact of the US recession on the Indian economy. So right now, Indian economy is much stronger, and also many believe that the US recession will not have any impact on the Indian market. And frankly speaking, I would love India to be such an economy someday, but today India is not an isolated economy. And if there is a recession in the US and Europe, then it will also have an impact on the Indian economy and the Indian market. And now the question comes, if there is an impact, then how much will be this impact? So if you see, Indian exports contributed 21.4% in the year 2021 and 2022 to the India's total GDP. And out of this 21.4%, the US accounted or contributed around 80% of the total exports. So by seeing this data, you can figure out if there is a recession in the US, then it might not have a heavy impact on the Indian economy. But still, an impact will definitely be there. And this impact can be on few particular sectors which are heavily dependent on the US and Europe markets. For example, the Indian IT sector contributes more than 8% to the India's GDP, and it employs more than 50 lakh people in India. And the Indian IT companies are heavily dependent on the US and Europe market, which contribute more than 86% of the revenues to the Indian IT firms. So for that reason, if there is a recession in the US, then it will directly impact the Indian IT sector, in turn impacting the Indian IT companies like Happiest Minds Technologies, KPIT Technologies, Tata Elxsi, Wipro, TCS, HCL, Infosys and many more. And along with the IT sector, there are also some other sectors which are mainly manufacturing sectors that can also be impacted, because these sectors also export and cater the US market and European markets heavily. So now, after understanding this whole recession scenario, it's time to ask the $1 million question, and that question is, how can you benefit from the US recession? So to understand it from a basic level, if there is a recession in the US economy, then it will also definitely hit the Indian stock market, because a recession in US not only impacts the exports, it also impacts the investments that are coming from the US market. But having said that, this can also be an opportunity to buy fundamentally good stocks in the Indian stock market at a very lower valuation or cheaper prices. And here, these kind of good stocks can be available in two categories. So category number one are those stocks which are genuinely impacted by the US recession, like the IT sector stocks. For example, it could be TCS, it could be Infosys, Happiest Minds Technologies, KPIT Technologies, Tata Elxsi and many more. So what is happening here? Because of US recession, the revenue and the profitability of these companies might get impacted. And in stock market, when a company's profitability or growth get impacted, the stock price will also fall according to that. And if you see right now, the market is already anticipating revenue and profitability impact in IT stocks, because of which the stocks of quality companies like Tata Consultancy Services is already down by 25% from its all-time high price of 4,000 rupees. And if there will be a recession in the US economy, then the stock price might continue to fall, making it available at even more cheaper valuation or lower prices. And right now, if you see, these stocks are falling only because of a temporary situation of recession, because recession is bound to recover. And along with that, the quality IT stocks are also bound to recover in the long term. And for that reason, situations like this, when quality stocks are available at cheaper valuation or lower prices, might be a good time to invest for the long term. And after this comes the second category of stocks, and these stocks might not be related to the US economy or to the US recession. For example, stocks like Hindustan Unilever Limited or DMart earn 100% of their revenue from the Indian market, and they are nowhere related to the US recession or the US economy. But still, if there is a recession in the US market, then it will create some kind of a panic, because of which stocks like Hindustan Unilever Limited and DMart might also fall for no fundamental reason at all. And such kind of a fall in quality stocks, which is not related to the quality or the fundamentals of the company, and the stock price is falling only because of panic, then such situations can be golden opportunities to invest in such value stocks for long term. And of course, apart from these two category of stocks, you can also look for opportunities in the US stock market itself, because a recession in the American economy can be a golden opportunity, because if there is a recession, then stock market will also be impacted, stocks will go down, and US stock market has some of the great companies like Netflix, Amazon, Google, Intel, Walmart, Tesla and many more. And these companies listed on the American stock market have one of the best businesses in the world. Because if you see, no matter how bad is the recession, but ultimately it is believed that the US economy is bound to recover. And as I had mentioned earlier, the US has already recovered from 30 recessions. So this time it is no different, and the history might just repeat itself. And for that reason, many great investors believe a recession to be the best time to invest in the stock market, including the legendary investor Warren Buffett, who personally invested billions of dollars in the US stock market during 2008 recession. And he also has a famous quote about stock market which says, "Be fearful when others are greedy and be greedy when others are fearful." So that's it for today, guys. If you enjoyed the video, then please make sure to press the like button, which will make YouTube algorithm happy and help this video to reach as many people as possible. And also, to keep watching more such informative videos, you can subscribe to our channel and also press the bell notification so that you get an immediate update as soon as we upload our next video. So I will see you in the next case study video. Until then, this is your friend Bharat Shankar signing off.